students, I am Dr. Ritu Sharma, working as Assistant Professor in Biani Group of Colleges, welcomes you on behalf of gurukpa.com. Today I am going to deliver lecture on compensation. As we know, compensation is an amount which is paid by a person to another to settle any losses, damages, for broken agreement and for other issues. But under the Income Tax Act 1961 and especially under salary head, compensation is categorized under three categories. First is retrenchment compensation, second one is compensation on disabled or death in accident of employee, and third is voluntary retirement compensation. Now the first is retrenchment compensation. What is retrenchment compensation? This amount is paid by employer to employee at the reduction in number of employees under Industrial Dispute Act 1947. This amount is calculated under the specially 25FB section. This amount is partly exempt under the Income Tax Act for taxation. So, we can calculate this partly taxable amount through this process. So, we have to find out three items. First is actual amount received by the employee. Second is maximum limit for this compensation amount is 5 lakh. And third is salary, 15 days salaries for every completed service year and part of annum of service year on the basis of last 3 months salary. This amount is calculated under section 25FB under the Industrial Dispute Act 1947. But least of the following amount is exempt from taxation. So we can calculate these three items and whichever is less amount is exempt from the tax. Here the word salary. For salary, average salary we take last preceding 3 months salary when an employee retire from the job, 3 months salary and divided by number of days. So, and the next condition is if this compensation amount is getting by the employee under approved government scheme or rule, then 100% amount is exempt from taxation. These rules are given under the section 10(10)(b) for retrenchment compensation. Now, second is compensation on disabled or death in accident. This amount is received by an employee after getting permanently disability or any family member of employee after the death of employee in accident. Then its amount, 100% amount is exempt from tax under the Workmen Compensation Act 1948. For example, in Bhopal gas leak, this amount received by the employee or the family member is 100% exempt from tax. Now, I would like to continue with third category. This is voluntary retirement compensation. For this, exempted amount is given under section 10(10)(c) under Income Tax Act 1961. This amount, for the exempted amount for this, we have to find out 4 items. First is actual amount. Second in maximum amount is limit is 5 lakh. Third one is remaining period of service multiplied by lost drawn salary. And fourth is completed year of salary. Here we will take only completed year, but in the case of retrenchment compensation, we will take completed year plus part of annum. If service period is completed year and above the 6 months and above the 6 months, then we will convert into 1 year. But in case of voluntary retirement, we will take only completed year of service multiplied by 3 months salary on the basis of last drawn salary. Here the word salary, we will calculate for salary the basic salary plus DAF and percentage commission of sales, then aggregate amount is taken as a salary for last drawn salary for the calculation of voluntary retirement. For the especially in this case, this amount is provided once during lifetime of an assessee. So students, we can solve all the questions based on compensation on the category of retirement retrenchment and on voluntary retirement through this processes. Friends, we can understand this concept through this question. Here is a question given for retrenchment compensation, that Mr. X terminated on 15th August 2016. His service period is complete 12 years and 8 months. Compensation amount received by Mr. X is 65,000 and the salary since 1st July 2016 9,600 per month, and prior this date the salary was 9,000 per month. For exempted amount for the retrenchment compensation, we have to find out 3 items. First is actual amount received by the Mr. X, which is 65,000. Second is maximum limit, which is given under section 10(10)(b) is 5 lakh. And the third amount is, which is calculated under section 25(f)(b) under Industrial Dispute Act for completed year plus part of annum multiply by 15 days into last 3 months average salary. Here Mr. X is retired on 15th August 2016. Then just preceding this year, we will take 3 months salary, May, June and July. For May, since July 2016, his salary was 9,600. So we will take here for 1 month, and May and June 9,000 per month. So we will multiply by it 2. So here the number of days for May 31, for June 30 and July 31. Total amount, aggregate amount will be divided by number of days, total 92, and amount will be, we will get 300 rupees. So according to this rule, 13 year we will take completed year and part of annum. Completed year is given 12 year and 8 months. We will convert 6 months and above the 6 month in 1 year. So total number of service period 13 year, multiply by 15 days salary on the basis of last 3 months average per day salary, which is 300, and the aggregate amount will be 58,500. According to this section, least of the amount is exempted from tax. So here the least of amount is 58,500, which is exempted under section 10(10)(b) in Income Tax Act 1961 for Mr. X. Now friends, we can understand voluntary retirement compensation through this question. Here is a question given that Mr. Y gets voluntary retirement compensation amount 7 lakh rupees. Service period of Mr. Y is 20 years. Age of Mr. Y is 45 years. Normal age for retirement is 60 years. Then remaining period of service is 60 minus 45, 15 years. And the last drawn salary, basic salary is given 12,000 and DNS allowance which 50% is treated as retirement benefit 6,000, then 50% 3,000. We have to find out 4 items to get exempted amount for voluntary retirement benefit. So first item is actual amount received by Mr. Y, which is 7 lakh, and the second is maximum limit under section 10(10)(c), which is 5 lakh rupee, and the third is remaining period of service. Here retirement age is 60 years and Mr. Y age is 45, then remaining period is 15 years multiplied by 12 months. On the last drawn salary is basic salary 12,000 and 50% of DA 3,000. Then total is 15,000. 15,000 multiplied by 15 year and 12 months, then total amount will be 27 lakh. And the fourth item is completed year. Here given the information 20 years, then we will take 20 years multiply by 3 months. 3 months average last drawn salary for completed year. So 3 months and last drawn salary is 15,000 and the aggregate amount is 9 lakh. For the voluntary retirement compensation under section 10(10)(c), the exempted amount is whichever is less, and the less amount is 5 lakh. So, this amount is exempt from tax. Thank you friends. Now, you can solve other problems like these questions. Thank you for watching my video. Please like, comment and share, and don't forget to subscribe our Guru Keep You channel. Thank you.